Today on Resource Talks, Lobo Tigre will try to hold me back from making mistakes and hopefully not wasting what looks to be an extended bull market. Or is it? Well, hopefully we'll figure it out. By which I really mean Lobo's going to figure it out, and then he'll tell me about it, and I'm going to pretend to understand it, and I'll pretend to be smarter than I really am. But I am looking forward to it nonetheless. Lobo, thank you so much for being here today.
Always a pleasure. And, I'm going to have to serve myself some of your humble pie there. I'm just a due diligence guy. I don't know where the hell the world's going. It looks like it's in a handbasket to where. We'll see.
Whatever that means. That's right. No, the pleasure is mine. And I know you don't have all day to listen to me, and you've already heard all nine of my jokes at this point. So I'll just jump right into it. But where are we though in the cycle for junior mining specifically? Like if we use the psychology of a market cycle, that chart, there's this, what is it, hope, optimism? Is it thrill? What's going on?
Let me actually jump sideways in my answer to your question because I've been looking at the market action over the holidays, and we do have, I think, significant new data. Like my thinking has actually evolved on this over the last few weeks. And particular, as we're speaking, we've got like the base metals are on a rip this week. Even aluminum and lead and zinc are up. Nickel was up this morning about 10% at one point. So it's at the very least, it's not just the debasement trade and monetary metals responding to probable continued weakness in the dollar. It seems to be like a broad-based metals rally. I don't know that corn and soybeans have joined in. So I don't know that it's a broader commodities rally, but in the metal side, the mineral side, apart from oil, it just seems like there's just a real fire has been lit under all kinds of these commodities that you and I care about the most. So I'm not answering your question with where we are in the cycle generally. I'm positing more of a commodity super cycle thesis here, which I haven't been thinking about in those terms for a while. But if that's right, going to your question, it would suggest an earlier stage part of that cycle. Mm. If the metals as a whole, not a whole, but if the metals as a vaguely defined class, let me put it this way. I'm struggling for words because this is a new idea for me here. But I think Mr. Market is catching on to the idea that these critical minerals actually are minerals. You can't grow them. You can't recycle more of them into existence. You've got to mine them. And there are limits to them. There's supply constraints. Some of them come from strange countries that are not necessarily very friendly to us. So the broadness of the interest here and the size of some of these moves has me thinking that, this makes me a little uncomfortable, but it has me thinking that the narrative here is really taking hold, that we're starting to get finally the generalist investor to sit up and pay attention to this. So if that's true, Antonio, and if it's just starting, then that suggests that we have, a pretty exciting 2026 ahead of us, and not just on any one of my favorite metals, but really anything that has the storium to go with the whatever the mineral is. I mean, the nickel move today, maybe we'll find out tomorrow that there's some mine disaster somewhere, or Indonesia clamps some new supply constraints or something. And I just haven't seen that headline yet. But it's not just nickel. It's copper over £6, silver's over $80 again. Gold's looking at 4,500. I mean, this is really a striking move, and it cuts across the divisions that industry insiders think about of monetary or safe haven or precious or base. I think it's really interesting. And if that's so, if we're really looking at a new commodities super cycle, like getting going, then that suggests, years ahead. And not being technical, being more of a fundamentalist, that actually fits with my view of the debasement trade, of the things that I've been saying in recent interviews about how all paths lead to inflation. The Trump agenda is inflationary. Europe rearming is inflationary. Russia's war is inflationary. And my favorite is that Mr. Xi over there in China seems to be taking a page from Mario Draghi, and we'll do whatever it takes to get 2% inflation, right? All of these things are bullish for anything governments can't print or loan into existence. And that definitely includes, the metals that you and I have been tracking for a while, and broadly the narrative of these critical minerals. That it's looking like flavor of the day to me, Antonio.
Who would have thunk that there would be a time in which we miss Mario Draghi, right?
Yes. Yes.
No, you're well. So no, you're.
And now, sorry, but I can't let that slide. Now there's this Draghi report where Mario Draghi, Mr. Oh, I got to get me some inflation. He's now advising Europe on how they can become more competitive, and all these people taking so seriously this Draghi report about how Europe is going to compete with the U.S. Yeah, good luck with that.
Well, the caps on our bottles don't come off, so I think we've won every race that is possible. But
it's hard for us to compete with that.
You're not answering the question directly, and that's fine, because I think I could answer it for myself based on what you told me, looking at the chart that I have in front of me, and I think you don't have it, but it says, so it starts at disbelief, and disbelief is characterized as this rally will fail like all the others. I think we're past that point, obviously. And then it goes into hope, a recovery is possible. That's what hope says. I think we've already seen that. A lot of the prices are beyond what they were last year. So a lot of the stocks are up a lot. And then it's optimism. I think that's more or less what you're telling me right now, is that this this rally is for people listening and not watching, I'm laughing because Lobo was teasing me with his cap coming off of his bottle. But optimism says this rally is real, and that's what I'm getting from you. I mean, this what you're saying is that it's real, and it's not only us, metals bugs and kind of the internet crazies who believe that. It's more and more people waking up to the fact that it is real.
Yes, not yes and no, but yes and squishy. Sorry. But I'm trying not to bullshit here. And so, yes, what you just, I do think there's this reality. There's a real wake up. Like you and I know, and our audience probably knows, like if you don't grow it, you got to mine it. You can't, even if you want windmills and solar panels and all these wonderful new things to save those nice blue people on the other planet or whatever we're doing here, Smurfs. You've got to mine this stuff. You can't have wind turbines without all these minerals. You can't have solar panels without silver and all these other things. The batteries, all this stuff. So like we've known this for a while. And I remember getting quite a bit of pushback a couple of years ago. I started writing that eventually the green agenda would trump NIMBY thinking because reality, like you've got to have these minerals if you're going to have this green agenda going forward. And so sooner or later, that NIMBY thinking had to give way. And we have seen that now where that's it's not gone. But all this ESG stuff has been dialed back to where people are looking like, okay, how can we try to be friendly to the environment, but also get our minerals that we have to have? So that's really happening. So this is real. And now it's got tailwinds from the data centers, not just electric cars and wind turbines, but like this. There's a whole new electrification and IT story here that I think, for all the hype in that space, is also real and durable and will be years. The build out will be years in the making. It'll consume a lot of raw materials. So yeah, that's very real. And then on top of that, we've got, I mentioned the remilitarization of Europe. I mean, the Trump agenda, the replacing the Monroe Doctrine with the Trump Doctrine, that takes a lot of hardware, and projecting that force and occasionally blowing stuff up, that requires raw materials to replace everything. All of this requires this real stuff that you and I have studied and invested in for all this time, how to profit from getting this real stuff out of the ground into the market. So that's the reality. But there is hype here as well. And, the AI bubble, I mean, even if AI is real and these technologies will go forward, companies with ridiculous PEs, it's going to take 100 years for this company to grow into their earnings. And the technology changes every couple of years. Like even if you only have a 20 or 30 PE on an IT company, who knows what the technology is going to be in 5 years, let alone whether they'll be able to grow into this stuff. So there is a lot of potential for unwinding. Now, there's also the helicopters, the fiscal dominance. So a lot of money sloshing out there. I'm not predicting a market crash. I'm not saying the AI thing has to send everybody, scurrying for the hills with all that easy money out there. But there is potential for reversal here. And so while the stuff that we're talking about, metals, mining, hard assets, that's real and we need them and that will go forward. That doesn't mean that the market insanity in other parts of the market can't give us, counter currents and tailspins and other things along the way. So I'm not sure I'm being very helpful here, but if I'm new to the space, I'm very interested in getting long because this is a mega trend and I think it has years to go. If I'm long already and I'm profiting a whole bunch, that's great. But you should have a strategy for making sure your gains don't slip through your fingers. My mentor, Doug Casey, had his sell half on the first double strategy. I've got my upside maximizer, develop your own strategy. I don't care. But no profit is really a profit until you actually realize some gains. And that doesn't mean you lack conviction and you're a traitor to the cause of your favorite metal going higher. It just means like if you're in this to make money, well, you have to actually do the making money part. So if you're new to the space, I would look for exposure. If you're way long, I would not want to let gains slip through my fingers. And nothing goes up in a straight line. Even if, we have a very bullish outlook for years to come, that doesn't mean it has to go up forever without any hiccups along the way. So, that's good news for people who are looking to buy, is that there's probably going to be some volatility that can be your friend. And that's a reason for those long already to stay disciplined. Don't forget that nobody goes broke taking profits.
What you don't want to squeeze JP Morgan, bring it to its knees.
As a human being, perhaps I do. As a speculator whose goal is to make money, I couldn't care less. My goal is to maximize my returns, my profits.
Here's something that might be more telling as well. Last time you and I spoke, you told me that you were about 30 to 35% cash. And when you go from optimism to belief says it's time to get fully invested. Are you fully invested right now? Do you have less cash than last time?
I don't want to speak out of both sides of my mouth, but the answer is literally yes and no, in that haven't taken any more profits lately. I have bought some more stocks. So I have been redeploying. But I also took some money out of my portfolio and I've been paying off my mortgage. I think I'm one more payment and I will pay off in my entire mortgage.
Oh, nice.
And no, it wasn't a 2% mortgage. No, it's not as high as it is now. But I'll have no mortgage, right? I'll have just an asset on my books that could be liquidated if needed or whatever. But it's an example of realizing a gain. So I will have turned paper gains in stocks, highly speculative stocks, into a nice house on the beach in Puerto Rico, completely paid off. Can't lose, right? So, does that mean I lack conviction? All this stuff? I mean, whatever. You can throw eggs at me if you want to, but I've got the house on the beach. It is paid for. So I'm not going to lose any sleep over that. I just think it makes sense to, well, let me put it this way. I'm paying off my mortgage early and I've got more money in the markets now than I did a year ago. So you can't say that I've betrayed silver or whatever your favorite mineral is. I'm still massively long, but I've made so much money that I could take some out, pay off the mortgage, and still be massively long. I just think that, well, let me put it this way. The guys on the bar stool who are sitting there going, yeah, he lacks conviction. Oh, yeah, it's going to the moon. I'm staying long until they pry it out of my cold fingers when I'm dead, whatever. That's not what you hear from people like Rick Rule or Doug Casey or Jeff Gundlach, going broader in the world, or Howard Marks or even Warren Buffett. Like successful, wealthy investors, every once in a while they take profits, right? The idea is to make money, not just watch stock charts.
I think I will throw eggs at you because eggs are down like 70% on the month. I mean, they're practically free in the US at this. It's a generational low in eggs at this point, so might as well throw them.
I've noticed that the cage-free eggs that were costing me 15, $16 in the store during that, when Trump got into office and
Mm-hmm.
was complaining about the eggs, they're now down to like $6. So
That's still
yes,
too much. You should
it
ask for a
has
bigger
happened. It's a
discount.
true thing. I can see it in my life. Thank you, Mr. Trump, and whatever the secretary is who supposedly controlled the egg prices.
You should ask for a bigger discount. You should say, I've got a copper top friend. He told me you're ripping me off. Eggs should be cheaper, and they're gonna agree, of course. Um,
Well,
I
there are
think
27 things I could go there, but that would be a distraction.
no, I think this sets the stage nicely here, Lobo. And the conclusion is we are in a bull market, a real bull market, but not a brainless bull market, which is
Yeah, I
making
mean,
me
it
think
makes
about
me
it.
nervous to say that. I agree with you. It makes me nervous to say that. We've got record prices, at least nominally, for copper, silver, gold. Uh, Lots of things are up, and normally I'm pretty cautious. I'm the guy who gets booed off the stage for saying uranium just went to triple digits. It pulled a hockey stick. A correction is not only likely but highly probable. That's my usual MO. So here I am saying, yeah, everything's going up, but I remain quite bullish.
Hmm.
Now, if you think about it, okay, at least give me this. If I was the perma bull who every day says it's going to the moon, then you could ignore me. But I'm not the perma bull. I am the guy who every once in a while says, hey, it doesn't hurt to take some profits. Things that go vertical don't go vertical forever. In fact, I've even done that in the gold space. In 2000, I got a lot of hate for gold going up. Sorry, not 2000. In 2020, for gold going up over 2000, I got a lot of hate for saying, that taking a bit of profits wouldn't be a bad idea. And then it corrected and consolidated for 3 years.
Mm-hmm.
I've lost the track of what I was saying.
Well, the point where I was going with this, at least, is that I wanted to ask you, or go and talk about something that one of our mutual friend, or a speech that one of our mutual friend gives often, and that's it's Rick Roll. He often talks about not wasting bull markets. So I guess I'll open the second part of the conversation a bit more broadly here. But how do I do it? How do I not waste this bull market as a retail investor myself?
Well, hey, that's what we've just been saying. And Rick himself has said that he has recently sold in late 2025. Rick was on all kinds of interviews saying that he didn't just take profits, he sold, completely closed out some of his positions, and he sold enough stock. As I understood what he said, he sold enough of his junior mining stocks to go risk free on the entire balance of his portfolio. Like his stocks, his portfolio was up enough that he could sell enough money or get enough money back off the table so that all of the rest of his stocks in play, like if he lost them all, he couldn't lose. The profits he's taken covers everything else he has left on the table. And
Mm-hmm.
and as I recall, the numbers were pretty amazing. He was saying he sold like 25% and that covered everything else. That implies that his whole portfolio is up 400x. I don't have access to that, but congratulations, Master Rule. Um, I think we've already talked about this, so we don't need to beat that to death. It's a pet peeve of mine. It's a big thing. Like you've got to realize gains, and you can't let gains slip through your fingers. Again, upside maximizer is my way of taking the emotions out of that. I have math to help me do that. But you also, if the thesis here is right, then you don't want to be caught short. If you're looking at this new, you're not long. I mentioned that a little bit before too. But I think the thing there is not to just rush out and buy anything. It's like I think it's I have a mental block or something. I cannot pay an all-time high price for anything. I have to wait for a dip. And if that means I miss it and it just goes screaming up higher, well, then I miss it. Like there's another Doug Caseyism. You can't kiss all the girls. To which I add, you only get a black eye if you try. So one gets away from you. So what? There's a lot of girls out there or boys or whatever, that you don't have to bag every winner. And if that one gets away, there's always another one. And markets don't go up in straight lines. There's always a point of fluctuation. Another Doug Casey is make volatility your friend. So how do we not let this slip through our fingers? One is go long, but use volatility. Markets fluctuate. It don't give in to FOMO, but wait for those chances to buy. And if we're right about this having, this being a super cycle that has some longevity to it, then you not only do you have time to profit, you have time to be patient and wait for something to present you with a value proposition. Buy high and hope to sell higher is not the formula. It's buy low, sell high. The best thing would be, some big scare like gold crashes right down to, it drops $500. You imagine gold drops $500 in a week down to $4,000. $4,000 would be so much money for the companies to, they'd be printing cash, but markets would panic. I mean, investors would puke if gold dropped $500 in a week. So that's exactly what the kind of thing that Doug Casey means by making volatility your friend. If gold crashes to a level at which the gold companies are making money hand over fist, but the stocks are on sale like they're going out of business, that's the market handing you a gift on a gold platter.
That's a good point about contrarianism, maybe, because I'm thinking, should you be a contrarian? Are you inclined to be a contrarian in this market? Because it seems like it's been an easy year. It seems like it's been an easy market. That actually sounds scary to see as well. But why complicate things by being a contrarian? Or are you still inclined to do it?
Yes. I mean, so in fact, the last few stocks I've bought have been uranium stocks that during uranium spot price fluctuations recently, because it does. Gold and silver were going up. I already own gold and silver, felt no FOMO. I haven't bought any gold or silver stocks in 4 months, actually. So you can say, oh, he lacks conviction, blah, blah, blah. I'm already long. So no, I don't want to chase anything. That is what I'm doing with my own money. The last few buys were uranium because I could buy something that objectively looked like a chance to buy low, even at this stage, even with uranium, fluctuating $70-$80. It's back up again now. But on those fluctuations, there were opportunities to objectively do something that at least looks like buying low. And I think that there's good chances that we'll see this, copper top, in the copper space coming up. Nothing goes in a straight line. You do have this tension between critical minerals and AI and all this hype, and Dr. Copper being, the PhD in economics. And we have a world in which the president of the country with the largest economy in the world is trying to change everything. He's trying to retool the economy. And whether you agree with that or disagree with that, my thesis isn't pro or contra Trump. My thesis is simply that reshoring manufacturing to the United States is at the very least a bumpy ride. And it's not just tinfoil hat Lobo saying this. Just look at the latest ISM data. U.S. manufacturing is, it's had a horrible year. It's negative again, right? This isn't easy to do. And therefore, there's room for more volatility. So am I going to rush out and buy a copper stock while copper's, just risen over $6? No, I'm going to wait for the next fluctuation. Let me put it this way, Antonio. This may sound self-serving, and maybe it is, but it is the answer to your question, right? I don't do FOMO. I am never going to chase anything that's just hit an all-time high or a 52-week high. And if that means I miss something that goes even higher, that's okay. And where I'm going with this is, like, if you look at my track record, which is available for free on the website, you'll notice there are very few 10-baggers in. There's only one that comes close. But you'll also notice that unlike the mantra in this space that, you need to, if you're going to be a speculator, we're told you need to understand you're going to lose money on most of your stock picks and that the 10-baggers and 20-baggers will more than make up for it. And on average, you'll come out ahead. That's what I was taught, but that's how this business is. But if you look at my track record, I have actually came out ahead on something like 2/3 of my picks. So personally, you're asking me what I'm doing. Personally, what I'm doing is exactly that. I'm being cautious. I'm not chasing highs. I'm waiting for volatility to be my friend. And the result of that is fewer 10-baggers, but a lot more winners. I hate losing money. So I'm okay with a portfolio that results in doubles, triples, and 5-baggers and a lot fewer losses. I'm fine with that. And if all you want is 10-baggers, maybe I'm not your guy. Um, don't listen to me. But if you hate losing money, maybe think about what I'm saying.
I do have a question about copper as well, which we'll get to in a second. But it is making me think though about when you say you hate losing money, um, you only lose money. This is going to be like a huge thought, but you only lose money when you buy something that's too expensive for what it is, and then it goes back to its intrinsic value.
No, not necessarily. That puts the odds against you. If you're buying low and you're hoping to sell high, and there's usually, as Rick likes to say, the unanswered question. We're exploring, we're building the mine, we're expanding production, or whatever the deliverable is. But other things can happen. You can, Cobre Panama can happen to you, or the legendary endangered mosquito gets discovered on the flagship property of your Moose Pasture Inc. Junior, right? And suddenly your stock tanks. So, and that can happen even when the underlying commodity is rising. So it's not quite that simple. But if you buy high and hope to sell higher, you're starting out the game with the odds against you. Mm-hmm. Whereas if you insist on a value proposition, then you're helping the odds to be in your favor.
Well, and that's exactly where I wanted to go with this is, do you value things differently now? And I asked you almost the same question last time, but I didn't follow up properly because I know you typically like seeing a kind of a decent discount to NAV, but those are becoming increasingly rare. And in a few cases where a discount to NAV is still present, it's probably because the company is of lower quality. So how do you deal with valuations in this bull market?
So the answer is mostly no, but not entirely. So when it's producers, and you should have a NAV multiple, even if a low one, but something. And if you've got a discount to NAV, the market is telling you there's something wrong with that company. For pre-producers, you're looking at NPV instead, and there it is normal to have a discount, even in a bull market. If the company is already being more than valued for the NPV of the project it's building, it's being paid in advance. And you could say, oh, well, the price has gone higher than in the assumption in the feasibility study. So the NPV is really higher. There's something to that, but there's a reason why the assumption in the study is conservative. Because, okay, the prices are higher now, but what if they fluctuate? You're building a mine with a good mine has at least 10 years, if not 15 or 20 years of mine life. And over that time frame, spot prices are not going to remain that much higher above cost. Even if the spot prices do continue rising, your spot price of your commodity that you're producing is somebody else's input cost, right? So iron will go up, fuel will go up, tires will go up. So you can't. It is a mistake to just adjust somebody's feasibility study for spot prices. But anyway, so the market should give a discount because there is always execution risk. If you're building the mine or if you're still in advanced exploration, things can go wrong. And so there are possibilities, but there's sort of a margin compression here. In a bear market, you can get, good looking projects for 10 cents on the NPV dollar. In a bull market, you might be paying 50% of NPV or more. But you should not be paying 100% of NPV, even if metal prices have gone up. And there are still, I think, opportunities like that on the table right now. But I just told you that personally, I haven't bought a gold or silver stock for months. And this is why. I'm just not willing to make that compromise. And I can tell you, I won't throw anybody by name under the bus, but let's just say earlier in my career, there were times when metals prices were on a tear and all the company valuations were going nuts. Juniors with nothing, never mind a feasibility study with an NPV. They didn't even have a discovery yet. And they're trading for a couple $100 million. And what happened is you get into this thing where nothing is on sale. There is no buy low. So what do? You got a newsletter to write. You got to come up with something. So you get into relative valuations. Oh, well, this Moose Pasture Inc. Junior is only trading at 100 million, and all the other Moose Moss Juniors are trading at 200 million. So this is cheap. It's only 100 million compared to, but they're all worth zero. So you can play my "it's worth zero" clip that you like so much here. But they literally have no value. Well, maybe the furniture and a few of the trucks could be sold or something, but you know what I mean. So that relative valuation game, it gives you something to write about. if you don't care about investment outcomes. But my experience with that was horrible. Like when we went there, the outcomes for shareholders were not good. So personally, I'd rather see the girl go dance with some other guy because I got there too late than to pay too much to try to take her away from the other guy. And then, turns out she's married anyway or whatever. I don't know. I'm bungling the metaphor there. But what I'm saying is my experience is that what typically happens in the newsletter writer industry is when things get pricey, we stop paying attention to actual valuations and go to relative valuations because you can write a story that looks good. And my experience is that does not do well for investors. So I'm not doing it. I'd rather sit on my, well, no, I don't just sit on my hands. And so if I haven't been able to buy gold and silver stocks recently, what have I done? I've rotated to uranium, and I'm expecting actually to do a lot more in the copper space this year. I'm not doing it today at $6, but nothing goes in a straight line. I do think volatility will be my friend here. And you know what? If the world goes, so smoothly and everything goes so wonderfully smooth and there's no popping of the AI bubble or even deflating, everything's going great, and copper and all these critical minerals just go in a nice steady line upwards. Well, in that really nice safe world, maybe the bid will go out of safe haven assets like gold, where everything is calmed down. That Putin and Trump made up, and Putin and Xi made up, and everybody's singing kumbaya, and the lambs are sleeping with the lions, and everybody's doing great. In that world, maybe gold will get cheap again, and I'll be able to buy something there. Markets fluctuate. I don't want to quote Jim Cramer, but there is always an opportunity somewhere if you're willing to be patient. And I'd rather do that than go around chasing and giving into FOMO.
Would you still pay north of 100 million for an exploration company, though, one that doesn't have an MRE, or even one that's, there might be historic work there, but there's, no confirmed new, like, current discovery? Would you still pay north of 100?
Let's be more specific. If there's no clear evidence of a deposit, no. And I wouldn't care if it's, those famous guys who always make money. I don't want to throw any names out there, but I think you know who I mean. Famous mining investors can attract capital and lower the cost of capital and push exploration aggressively. That there is some kind of value to that, but I don't assign any market cap to that. So the answer is no. I wouldn't buy anything on the basis of, oh, this famous guy's got piloting, we're going to explore here. There is no valuation there for that. Sometimes you mentioned historical. Sometimes there are historical resources, not 43-101, but done by like Chevron in the 1970s or something, or you know what I mean, mm-hmm. or even a quality Canadian explorer, and post 43-101, but for some reason it's not considered current. I don't want to throw a specific example out there, but there are resources out there that are not 43-101. They can't officially say they have anything, but you can see it. The data is there. And if you search archives, you can actually find the old data, what the old estimates were. So I would be willing to provide, extend some provisional valuation to something like that. But if it's just exploration, we've got an anomaly. Well, anomalies are like armpits. Most everybody's got at least one, usually two, and hopefully not more. But I don't assign any value to that at all. Maybe one thing to clarify here is that personally, like myself, not necessarily for all newsletters or people, but me, like I don't invest in pre-discovery exploration anyway, because it just, you never know who's going to do it. It can take a long time. Even the most successful people, it can take a decade or more, Ron Peratt, somebody like that, between discoveries. And so the best way to do that is with the prospect generators, where you have other people's money offset the expenses, and then you can be very patient. So, I don't even do that, because as a newsletter writer, with all these people looking over my shoulder saying, what have you done for me lately? You got to be patient with these guys, right? So there is a personal aspect to my answer to your question. If I was a private investor and nobody was looking at my portfolio or my results, I could be a lot more patient. And I might own, no, I probably would own, let me put it that way. I probably would own a basket of prospect generators. And so to your question, would I think it's worth 100 million or 50 million or whatever just because of these? No, probably not.
Hmm.
But when you're in the sub 50 million range, we're talking peanuts anyway. So the company is worth nothing. But if they discover anything, it's going to be worth a lot more than 50 or 100 million, if anything worth discovering. So if I'm patient and I'm willing to wait for the proven successful people to put other people's money to work in a prospect generator, I'm not saying I would value the company. I'm saying I'd be willing to buy the stock.
Hmm. Is prospect generators are in large part about managing risk, though? Is that what you should be optimizing for in a bull market? And that might actually be a good question in and of itself. What's going to be the best way to not waste the potential of a bull market? Is it the cash rich explorers over your discovery plays or PPSS or optionality plays or prospect generators?
Well, potential doesn't exist, so you can't waste it. But not to dodge your question, if you have a company that's self-funded exploration, owns 100% of the asset, they have nothing, but they have the land 100%, and maybe there's a famous investor or a famous miner on board, and that helps them raise 30 million bucks or something. So they got a big treasure to go out and just drill, baby, drill. And they get lucky and they make a discovery. That stock will absolutely outperform the prospect generator that's already in advance given away 60 or 70% of the project to the larger company that's earning in. No question. That self-funded exploration in a bull market, they make a significant discovery, that stock will outperform. The problem, of course, is that they are spending their own money. What if they don't hit? And what if the bull market turns around? They can go the way of the dodo really quick. Whereas the prospect generator, the risk managers, they're still chugging along there. It was other people's money that got blown on those drill holes. Sorry, it didn't work out. They get the project back. They turn it over, look for another one, or they learn from the failure of those people who so kindly spent that money, that high risk exploration money, right? To find better targets and then go out and find some. I think our friends, the Poliquins at the Almaden companies, if I recall correctly, some of their projects in Mexico were like that, where they did initial prospecting, other companies came and explored, did trenching, maybe some drilling, handed it back, didn't see what they wanted. Majors are famous for this. They'll put a couple holes half a kilometer apart. They don't both hit, not big enough for us, they walk. But one of them hit a spectacular hole. And so the junior goes back and figures out what's going on there and finds a mine big enough for a junior or a mid-tier or something. Anyway, I think I've seen cases like that in companies like that where they've got the project back, thank you very much, and then gone on to make a significant discovery. Mm-hmm. So we were asking, your question, if I recall, was in this market like this, would those self-funded, exploration stories outperform the prospect generators? It would be hard to say other things being equal because they're not equal. But if a prospect generator and one of these self-funded companies made similar discoveries, something that looks like a 5 million ounce gold project that could be taken over, I would guess that the self-funded one would do better than the prospect generator. But you're taking a lot more risk that way.
Well, it was more of a question. How do you not waste potential, and what makes most sense to bet on as a category? Is it still your the favorite prospect generators of yours, or is it something else that makes more sense in a bull market? And that's risk reward that I'm thinking about, not necessarily only upside.
I guess my answer is that that's really not a market cycle thing. Like if you're retired on a fixed income and you're interested in this space and maybe getting some leverage to it, but you really can't afford to lose your nest egg, I really think that's much more important than anything else. So you're gonna lean towards the commodity itself rather than any mining companies at all, or maybe If not a commodity ETF, then maybe a royalty play that's really solid, give you a little bit more leverage, but a lot less risk. If you're 19, no kids, got some extra money, swing for the bleachers, sure, you're probably going to skew towards, these very early stage things, pre-discovery plays, maybe. But there is something in between. But that's my answer to your question. I think bull market, bear market, that's going to be much more important to you than the market cycle. But the other thing that was triggered, but I was just saying there's another way to play the exploration plays. I said, personally, I don't invest in or speculate on pre-discovery plays. That doesn't mean that I ignore discovery completely. There's a misconception out there in our space that the discovery is like that drill hole, that they make the discovery hole and the stock goes up 10 times. That actually doesn't happen. I've seen stocks double or thereabouts on a single drill hole that looks like a smoking hot discovery. But that first part of the Lassonde curve, that discovery phase, it's not one drill hole. It's the whole process from that discovery hole to the follow-up to defining a resource. And as they're going along and, from one hole to two to now we have a half a kilometer strike and it keeps getting bigger, that adds a lot of value. And as a company has a real discovery, there is consistency and predictability in those results. I call that success in progress. And that is after the pre-production sweet spot, success in progress plays are one of my absolute favorite things to invest in because I don't have to guess who's going to make a discovery. It's, like our friend Rick Rule says, don't confuse the inevitable with the imminent. I don't have to worry about any of that. This is something that's actually happening, right? You can see it. They made the discovery and now they've confirmed it and it's getting bigger. And that's a bandwagon you can jump onto and make, okay, maybe not your 20 baggers or 50 baggers or something, but in a bull market, it could be a 10 bagger. In a less excited market, it could be a double or a triple, but with much, much less risk. And, that's not a bad thing.
What about if we flip that, though? Because a good asset isn't necessarily a good speculation or a good bet. So is there a segment of the industry that you think could create that trap where, again, it's a good project or a good asset, but it's still a bad bet for this market specifically?
Logically, that makes sense. And I guess, if I'm saying I don't want to buy high and hope to sell higher, I'm agreeing with you. Yeah, like a good asset that's been priced in, everybody loves it. I'm probably not going there. The one caveat for that is, like, if you've got an asset that's an obvious winner, let's say a De Grey Mining's Hemi discovery in Australia, or some of these big takeovers we've seen recently, and which leads you to the answer to the question. But like something like that, if they had to build it themselves, they'd have to raise a whole bunch of money or hedge with a loan, or in the equity component, there would be dilution. So if the thing has been paid for in advance, if the market is giving advance credit for the full value of the project, so that limits your upside, whereas the dilution is guaranteed. One way or the other, either a bigger company comes in and participates and buys a chunk of it, so your ownership is reduced, or new shares basically amount to the same thing. All those new shareholders now have a stake in your discovery, and they weren't there before, so that dilutes your share. So one way or the other, if the value of this great asset that everybody loves has been paid in advance, and now we're going to build it, you're gonna suffer the at least risk of loss of value and perhaps share price. Mm-hmm. But if it really is that good, the takeover potential is huge, which was really my first answer. So like you can see something that looks fully valued, but to the bean counters that run the big companies, they're much less concerned. My view of their track record is that they're much less concerned about extracting a discount or a bargain. That's not they're much more concerned with ticking off the boxes of political risk, profitable operation, district potential. Like it's not just the one mine we're buying, but there's the one mine and there's the three more targets on trend, that sort of thing. Infrastructure, rule of law, all these things that your bigger companies are looking for. So you could have an asset that looks fully valued compared to the NPV and the feasibility study, and it still goes up 50% overnight if there's a big takeover offer. Well, if it's a If it's the larger the asset, the smaller the premium is likely to be. But you know, if 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 you make 50% on a stock that was otherwise capped and it goes like that suddenly, within a few months of you buying it or something, that's not a bad way to make money.
Mm.
So sorry. So the answer is like it would seem logically that an asset that's loved and understood, is fully priced. It's done. That's the end of the story. But never underestimate the power of a takeover.
Mm. Do you have your 8 ball with you?
I do.
Right there, ready. You still haven't taken it out of the package. I like the commitment there.
People say that, but if you go to the toy store, you can see on the backside, like it's supposed to be, you can test it. So you turn it up and you can see the little triangle floating around in there. So you don't have to take it out of the package. And here in
So,
Puerto Rico, everything you take out of the package, it's exposed to humidity and all kinds of stuff. So anyway,
but you live on the beach and the cap of your bottle comes off, which is fun.
life's a
But
beach.
you you to the best of your 8 ball reading abilities, where are we going to be in the cycle at the end of this year, having said everything we said so far?
Having said what we said, the new thing that I've been saying, an essential point to the thesis of this conversation, is it's starting to look like a broad commodity super cycle, right? It's not just precious metals, it's not just monetary metals, it's not even just critical minerals that are in scarce supply. It looks like, this is becoming a rising tide that is lifting all ships. If that's true, then as a group, we're looking at substantially higher prices by the end of this year. Here's one. Here's your 8 ball one. I may be completely wrong, but if I'm looking at my 8 ball and guessing, it feels to me like silver wants to take out triple digits. Silver just wants to hit $100, and gold wants to go to 5,000. Doesn't mean it will. I can absolutely be wrong, but it's not a technical analysis. There's no line I'm drawing on a chart. There's just sometimes when I'm looking at the volatility in the market action and I get this feeling. And I had this feeling when gold was heading up to 3,000 that it wanted to take out 3,000, and then correct. And that was right. I had this feeling about 4,000. Doesn't guarantee I'll be right this time. But for whatever it's worth, if you want to guess, not a prediction, but if you want to guess, my guess is that we probably see triple digit silver before we see it, and that could lead to a big correction, and that could spread to everything. Like
I'm amused.
Nobody wants to be caught when the water goes out and see who has no shorts. Another Warren Buffett thing. If it looks like the water's going out, everybody starts heading for the beach and their towels and stuff. So we'll see.
I'm amused because I'm reminded of the post that you made. It was about a video that says something like silver is going to be $4,000. I bet my reputation on it or something like that. And I'm like, okay, how do I put that into the title? Lobo said S&P
That
to
was one of
silver
those
ratio
AI
1 to 1.
things. Like I actually did not say that.
Yeah.
I don't think, like, if you clicked on that thing, that clickbait headline, and listened to the whole illegal clip, I don't know if they stole it from you or somebody else.
Probably.
But I didn't actually even say that in the clip. It was just totally made up thing. So, but triple digit silver 10 years ago would be like tinfoil hat stuff. But now it's only 20% higher from where we are, or 25% higher from where we are. It's not a huge move. And any silver bull can tell you that if you adjust silver for inflation, even using the CPI as a conservative case, you're not just looking at triple digit silver, you're looking at plus $200 silver. So could that happen? Absolutely. There's no reason why it couldn't. Will it happen? I don't know. The markets are different. Would I be surprised to see it happen? Not at all. Just as you and I are speaking, there was again, not tinfoil hat Lobo. It was Bank of America put out a call this morning saying that silver could go over $300. So makes me a little nervous as a contrarian when mainstream outlets like that pile on. But it also fits with the narrative. Like if we are looking at this commodity super cycle that we've been talking about in this interview, things like this seemingly wild and crazy call by Bank of America fit in perfectly with that.
But another tinfoil hat thing might have been telling someone that silver will take 45 years to cross 60 again, right? So, I mean, markets do fluctuate like that. Markets can be funny that way, I suppose.
Yeah. So
You mentioned last time when we
that
spoke.
hits on my favorite theme, and I won't pound it too much. But just remember, it may go to the moon, but nobody goes broke taking profits.
You mentioned though last time you touched upon it here. You said you're still not buying copper stocks, and last time you also said you were waiting to rotate into copper. Well, copper's over
Yeah,
six
that
bucks
has
now.
changed. That has changed. I have. I'm not sure. I remember when we last spoke. I did buy some copper in 2025, and there is copper on my shopping list right now for the independent speculator. Um, I had a price target. It went up. I always give clients 3 days head start, and the stock went up during that time before I could get there, and it hasn't come back to my price target. So I haven't actually bought that one yet. But I did make the decision to take the plunge, and I'm hoping volatility will be my friend. If not, I'll have to decide whether I can, with discipline, change my price target and not be chasing it, or just look for another girl to ask out to dance.
Yeah, but $6 copper sounds exciting. It sounds like yeah, it sounds like Robert Friedland's going to be right after all. $10 copper, I think, is what he's talking about. Potential wise, though, silver or copper?
Depends on what you mean by potential. I think silver has higher potential for gains this year.
Hmm.
I think the gains in copper are more likely, or no, more solid. Like silver and gold could spike today as we're speaking and then go into correction mode for years without breaking the story at all. That's what happened in 2020. Like in 2020, 2021, everybody's like, oh, this is it. It's going to be 2011 all over again. They're going down. And they were wrong. Right. By the way, if that did happen now, if 4,000 is the new 2,000 or the new 3,000, I think, again, that would be the volatility that is our friend and creates buying opportunities. For anybody who's looking to buy, that's actually the ideal outcome. A blow off top is not ideal. A consolidation period is ideal for those looking to buy. And that's actually my default case. I think we do go into, maybe, like I say, gold wants to hit 5,000, silver wants to hit 100, and then we go into a correction phase. I think that would be just fine for those long being able to take profits, and those looking to go long being able to take advantage of the panic afterwards. But to answer your question, I think silver and gold have the potential to go screaming up and then back down and then scaring everybody. I don't know how that it goes across the course of this year. Whereas copper, there may be some volatility in the near term, but I'm highly, highly confident that it ends the year substantially higher. And I'm willing to say that even at $6 copper. Though when I started thinking about this, it was $4 and change.
We are talking junior mining here, though, specifically today. So what if I added something to that? Copper juniors or silver juniors?
Probably silver juniors, in part because there are very, very few copper juniors. I mean, copper is big business. And if you are a copper junior, you're hoping that you're going to find something big enough for a major to come on.
There's plenty of
very, very rare to have it. There was Sherwood Copper back in the day. There was a Tico back in the day, but a small high-grade copper story that a little company can move forward with. Well, Capstone built itself up, but it's rare. Mostly, you're looking for something big that's going to interest a major, because those are the mines that matter, the big copper deposits. So, and I'm picky. Like you're hoping for that, but a lot of stuff, it just doesn't stack up. It's just too low grade or it's too inconsistent. It doesn't have the kind of scale that you need to move forward with a copper project big enough to matter. So, the world of copper juniors is pretty slim pickings. Whereas silver, just add an animal to it. Silver centipedes, silver potato bug, silver tardigrade. There's all these companies out there. Just add an animal to silver, and you've got a mining company, and people will pile into it. So at least you have more choices there. And you didn't ask, but it's starting to look like things are opening up a little bit in Mexico, which is very good for anybody interested in silver because it got pretty scary for a while. I am not giving the all green. I have not started buying silver plays in Mexico yet. But if I'm looking for silver and the government here continues on the path, they have started issuing some permits. They're saying the right things. We'll see what happens. Um, I have sources in Mexico that tell me that the kleptocrats in charge of Mexico may have realized that they'll make more money if they let the nice Canadians and Americans build the mines and then nationalize them, which means that you get a shot at the pre-production sweet spot before you can be expropriated. So that could work out. Anyway, I'm addressing your question about silver juniors, and I'm saying that there's potential here for some buying opportunities in the silver space if political risk changes. And by the way, Trump's policies, what just happened to Maduro, this could be seen as a not so thinly veiled message to Latin American countries that you want to be friendly to gringo corporations in the natural resources space. We'll see what happens.
You mentioned an exiting strategy multiple times. That maybe ties nicely into that, because I'm thinking, is it a micro, taking profits? Do you do that from a micro or a macro perspective? So top down or bottom up? And are you looking for the dollar to turn around, for real rates to go up or anything like that in order to start exiting a position or a country to go sour? Or is it just, I made X amount of money and then I'm exiting?
Micro? No, I'm not looking for the broader market. Like nobody's smart enough to do that. This is a common thing. Like nobody can reliably bottom tick and top tick a market. Doug Casey tells a story about having bought a handful of stocks at the very bottom back in the mid 70s. But it was luck. It was because he was a broker and a client had placed this order and then welched on it. So he decided he believed in what he said and he bought the stocks himself. And it just so happened that he bottom ticked that. Like nobody can do that. So I don't claim to be smart enough to know when the dollar is going to make a major macro shift or whatever. So no. But you did mention countries. If a country turns south, then that countrywide becomes a thing. Like if there's a coup d'etat or a virulently anti-business president gets elected or something like that, that is enough for me, like to categorically get my money out of potential harm's way there. Mm-hmm. But the answer to the question is that generally, no, I don't think I'm smart enough to time markets or figure out what's going to happen in the future. So I use my upside maximizer strategy, and that's the micro. So I don't know when gold or silver will top, but as we go screaming up, I've got big wins. I set triggers for my upside maximizers, and if the market rolls over, those triggers will be activated, and I will either take profits or sell, depending on how scared I am at the time or how greedy I am at the time. So far, like last year, there was a bit of consolidation and a bunch of those were triggered for me. And generally speaking, I took some profits. I did not exit. I think the only one I exited was a pre-production sweet spot play that went into production. So yeah, what I'm saying is instead of thinking I can figure all this out, I just let the math do it for me. And so if it's just one company, something happens to that company bad and in my upside maximizer is triggered, then it just affects that one company. But if the market as a whole or that commodity as a class turns over, then all of those triggers will get called. And that will get me out of the macro without me having to predict it.
Talking jurisdictions, I know you travel a lot for research and due diligence on the ground. Where are you going this year? What do you have planned?
Well, it's kind of a sad story, Antonio. I've victim of my own success here. I have a team and I've trained them and they're brilliant and they're really hardworking and they love getting out there and kicking rocks. And so these days I tend to be mostly the one that goes to the conferences. I've become the talking head for the company. And the guys go out there and kick the rocks for me. So I don't actually have a whole lot of rock kicking on plan this year. Like if I go see a project, it's probably just because I really want to. maybe it's one I've owned for a long time, and now they're building the mine, and I want to see it. Uh, but the team is out there. We have ideas in Canada, U.S., Argentina. Again, there's an interesting jurisdiction. Speaking of,
Mm-hmm.
uh, really glad to see Malay have some electoral success in the Congress and be able to do more with legislative backing now. So, yeah, one of the guys is headed back to Argentina soon, and we'll see. We're pretty opportunistic about this. And by the way, dear audience, we don't wait for the companies to invite us necessarily. We have a travel budget. We pay for our own travel. I have been known to go and see projects without telling management. Shh, don't tell them. When I can figure out where they are and go ask the locals what they think before anybody knows that I'm there. Full service due diligence we are. But yeah, it's mostly my team now that fans out around the world and takes care of that for me.
That's probably a good of a note as any to end the conversation on. Yeah, I think I'm all out of questions. What are we not talking about though? We talked wide ranging, so we talked about a lot of stuff. What did you want to talk about that I haven't brought up yet though?
Okay, if I'm going to give you a final capping thought that's not a sales pitch, I want to say that there is a lot of risk in the world today. And we're talking about making money on junior mining stocks and their various metals and things. Completely different thing from owning bullion. If you don't have any gold or silver or both, physical bullion in your personal possession, you should. And at that point, you shouldn't care how much the gold dollar exchange rate is or anything else. Uh, when there are fires burning around the world and fire insurance is available, you don't really ask how much it costs. You want to have fire insurance before there's a fire that affects you. Afterwards, you'd be willing to pay anything for it, but it's too late. So, metaphorical way of saying, like, let's not confuse our money making strategies with the simple prudence of owning safe haven assets and having something socked away for a rainy day. The world is a pretty scary place, and who knows how things might suddenly change. And I'm not a financial advisor, yada, 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 but I really do think everybody should have a rainy day fund in a physical asset that you can be long, that nobody else can be short.
Thank you so much. I appreciate you doing this and hopefully speak again soon.
Thank you, Antonio.